Welcome to Biz Wire. I'm Neil Jones in Beijing. Stricter regulatory oversight of Chinese companies listed in the U.S. has caused the frequency of initial public offerings by mainland firms in the American markets to fall sharply. More scrutiny may be on the way. A U.S. advisory body recently urged the government to adopt even tougher measures against Chinese firms listed or seeking to list in the U.S. Investigative due diligence by legal teams from short-selling firms like Muddy Waters has exposed a number of Chinese firms to have fraudulently reported assets and earnings. Those reports have had a collateral impact in other Chinese companies listed on U.S. markets to lose market value. Since 2010, when those kinds of reports began to surface, Chinese firms have shied away from the U.S. markets. In 2011, there were 15 Chinese listings in the major U.S. stock markets, namely the New York Stock Exchange, Nasdaq, and Nasdaq-related markets, raising $2 billion, according to Merger Market, an international publisher of information on mergers and acquisitions. That slipped to only 2 Chinese IPOs, which raised slightly over $150 million in 2012. So far this year, there have been 6 Chinese IPOs, raising $595 million. Gene Buttrill, a partner at U.S. law firm Jones Day, said the disagreements between the U.S. and China over disclosure are discouraging Chinese companies from listing in the U.S. Chinese companies often will not want the trouble and risk of listing in the U.S., where markets now seem suspicious of companies from China. They are listing in other markets. Buttrill said the backdoor listings of Chinese firms in the U.S. are completely dead. He said the Securities and Exchange Commission is subjecting Chinese firms to heightened scrutiny. A Chinese company seeking a U.S. listing can now expect more than 200 comments on its initial draft registration statement, compared to less than 100 5 years ago. The New York Stock Exchange and Nasdaq will review and ask questions of the Chinese listing candidates, while minimal review was conducted in the past. The U.S.-China Economic and Security Review Commission, or the USCC, has called for even tougher standards and inspections of Chinese firms in U.S. markets. The USCC is suggesting that the U.S. Congress should empower the SEC to set minimum standards for companies listing and listed on U.S. exchanges and enable the watchdog to delist foreign companies not in compliance with those standards. Currently, it is the U.S. exchanges, not the SEC, that set listing standards and delists companies. USCC also called for the Obama administration to encourage the Chinese government to develop better regulatory enforcement and more transparent markets within the mainland. USCC insists there are still too many restrictions by the Chinese government on U.S. authorities and auditors' inspection of Chinese companies listed in the U.S., despite recent concessions by Beijing. In May, the U.S. and China announced a deal for limiting information sharing between their regulatory agencies on U.S.-listed Chinese companies. In July, Chinese regulators agreed to turn over certain documents of some listed Chinese companies to assist the SEC in its investigations. The USCC is saying that is not enough because no agreement has yet been reached between China and the U.S. that would grant more general direct access to documents for U.S. regulators. This is reflected by the strong pressure placed on auditors by Chinese government, which has made clear they face criminal sanction if they cooperate with U.S. authorities. During recent investigations, the SEC sought audit papers from Chinese branches of multinational accounting firms that service U.S.-listed Chinese companies. USCC pointed out, to date, the accounting firms have refused to produce these documents, arguing that doing so would put them in violation of Chinese state secret laws and subject them to criminal liability in China. The USCC's recommendation that SEC gets directly involved in listing standards and delisting companies are unnecessary because U.S. stock exchanges are already stepping up their scrutiny of Chinese companies. There is a call for U.S. listing requirements that should be applied evenly and fairly to all firms regardless of nationality. You're watching Biz Wire on Blue Ocean Network, China's first and only privately owned broadcast media. All of our stories can be seen on our website, BONTV/biz-wire. In just a second, we'll continue with more insight into the big picture of China's economy.